This video is made only for educational purposes. No stock ETF should be bought without advice from your investment advisor. What is ESG investing? There are various categories of sustainable investing. They include impact investing, socially responsible investing, ESG investing, and values-based investing. ESG stands for environmental, social, and governance. ESG factors are sustainability factors when integrated into investment analysis will help investors to identify companies with superior business models that offer potential long-term performance advantages. All the three ESG sustainability factors have become very relevant in today's world. Environment is everyone's concern. We are already facing the adverse consequences of global warming in the form of extreme weather, sea level rise, floods, droughts, etc. in our everyday life. Businesses that have a negative impact on air, land, water, ecosystems, and human health are not sustainable in the long run. The IPO of global energy giant Saudi Aramco has received a tepid response from the international investors due to environmental concerns. Foreign investors were concerned that there will be a shift away from consumption of fossil fuels to green energy in the next 2 decades. In view of climate change worries, the international investors have not responded enthusiastically to the IPO of Saudi Aramco as its product crude oil contributes to carbon footprint. Social concerns refer to the adverse impact that companies can have on society in terms of health, safety, and human rights. Companies that produce or sell tobacco-related products are one such example. It is well documented that consumption of tobacco-related products is highly harmful to human health. Such businesses cannot sustain in the long run as people realize the harmful effects of such products. Governance concerns are about the way companies are run. Governance issues relate to areas such as board independence, gender diversity, corporate risk management, integrity of accounts, related party transactions, excessive executive compensation, interests of minority shareholders, etc. Government positive actions including aligning the interests of share owners and management, avoiding unpleasant financial surprises, increasing accountability of the board, ensuring better diversity in the manpower, transparent reporting and disclosures, and protecting the rights of minority shareholders. In recent times, many companies in India and elsewhere with negative governance practices have received a thumbs down from the investors. ESG investing looks at extra financial variables or factors. Responsible investors evaluate companies using ESG criteria as a framework to screen investment or to access risks in investment decision making. Thank you for 1K subscribers. Share, give a like, leave a comment. Please subscribe our channel